Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Thursday the 28th of February 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. And first of all, I just want to point out the cable rate. That's the British pound against the US dollar, trading at 133, or with a 133 handle, I should say, shortly before we recorded the video. The daily move doesn't really show the change, but the weekly move, as per yesterday, is showing the strength that we've seen in the British pound, up by 1.96% against the dollar over the last 7 days, on hopes of a Brexit delay and the likelihood of a no deal being off the table. But moving elsewhere, we saw gains for the Japanese yen, adding 0.14% against the US dollar. The Swiss franc was also up on the front foot, taking 0.28% off of the US currency yesterday. And it wasn't confined to safe havens. The Brazilian real also took money off of the US dollar, rising by 0.54% against the US currency. The dollar did manage to take some money off of the Korean won, however, adding 0.33% over the course of the last 24 hours. Dollar index for its part slipping slightly back towards the lower part of the range we've seen this week to trade at 96.09 shortly before we recorded the video. Okay then, what's on the calendar? Events that may move the markets today. And first of all, we've had some PMI data out of China overnight, the National Bureau of Statistics PMI data, and we'll look at some of that momentarily, but neither read was particularly encouraging. We will have at 6:45 GMT gross domestic product out of Switzerland for the fourth quarter. And that'll be followed an hour later at 7:45 GMT by CPI data out of France, and that's for February, a preliminary read, mind you. And then at 8 a.m. we're back in Switzerland for the KOF leading indicators for February. And then we have a pause, a significant pause, all the way around to 1300 GMT, and we cross over the Atlantic for a speech by Fed member Clarida. At the same time, we'll have the release of German inflation data, the harmonised index of consumer prices data for February out of Germany. And then at 13:30, continuing and initial jobless claims out of the US, alongside perhaps the more important number this week, gross domestic product data for the fourth quarter out of the States, alongside core personal and personal consumption data as well for the fourth quarter. So we'll look at the health of the US economy and the state of play as far as US consumers are concerned there. At 13:30 we'll also see current account data out of Canada for Q4, and then 20 minutes after that we'll have our second central bank speech of the day, and this time from the Fed's Bostic. 14:45 sees the last of the US data today in the shape of the Chicago Purchasing Managers Index for February. A pause then until 21:30 when we'll have AIG Performance and Manufacturing Index data out of Australia, building permits for January out of New Zealand, and to round the day off at 23:50 we'll see Tokyo CPI inflation data and unemployment data out of Japan, the inflation data for February, the unemployment data for the month of Jan. Okay then, breaking news and comment that's caught my eye overnight. And first of all, Mexico Central Bank has cut its 2019 GDP forecast from a range of plus 1.7% to plus 2.7%, down to plus 1.1% to plus 1.7%. So net a cut of around about 30%. And the bank also trimmed the numbers for 2020, I understand. We heard cautious comments from the USA's top trade negotiator last night that dampened market sentiment, and stocks slipped and safe havens bounced, as we saw with the Swiss franc and the Japanese yen in the movers earlier. Japanese industrial production fell at the fastest rates for a year during January, the data reveals, and autos and electronics were among the sectors that saw a sharp slowdown there in Japan. Staying in Asia, China's official manufacturing PMI data fell to 49.2 in February from a prior read of 49.5 in Jan, sliding further into the red. Of course, the market will expect the People's Bank of China to add some kind of stimulus into the economy. Their hands may be slightly tied, however, by the ongoing trade negotiations with America. So if they do anything at all, it's most likely to be in the way of tax cuts and indirect stimulus rather than pumping money into the system or weakening the yuan, I suggest. Okay, food for thought then. Something to take away with you into the trading day and beyond. And why not think about this? As the Mobile Phone World Congress comes to a close in Barcelona, I thought we'd take a look at the mobile phone market. It might surprise you to know that the first mobile phone call was made back in 1973 by an employee of Bell Labs. Since then, of course, the devices have become commonplace, but there are still areas of the globe where consumers do not have smartphones or even a mobile phone at all. And the table here, taken from research by Pew Research, shows the breakdown of mobile phone and smartphone ownership. Smartphones in green, feature phones or just plain phones in blue, and no phones at all in a light grey colour. Just want to flag a couple of parts of the world where people don't own mobile phones. It might surprise you that 25% of Canadians don't own a mobile phone of any kind, and there's a similarly high number at 17% in Argentina. Penetration is of course very high in other places. South Korea, 100% of the citizens in South Korea have a mobile device of some sort. So interesting stuff there. Still opportunities for the mobile phone business, although obviously saturation point has been reached in some markets. Okay then, it's risk warning time. Please take a moment to read this risk warning, because trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leveraged products for you, then please do contact your Pepperstone account representative. We'll be happy to take you through those. And please do take the time to read this risk warning thoroughly. Thank you for your time today. Good luck.